Hello and thank you for joining us at interest.co.nz. I'm Janae Tibshirani and today I'm talking open banking with UK-based digital financial services consultant Dave Birch. Welcome, Dave.
Thanks for having me.
Governments in different parts of the world want banks to share their customers' account details with third parties if their customers wish. The idea is for this to make way for more competition in the payments and personal finance space. While the New Zealand government is pressuring banks to engage in open banking on their own accord, banks in the UK have been made to do so. Dave, having advised banks, IT companies, financial services firms around the world on open banking, do you think it is actually having the intended effect?
The UK version of open banking may well not have the intended effect. And the reason for this is the regulators in Europe, in the UK and other places in New Zealand want more competition in the financial services space. And one way of getting that financial services competition is to get the banks to open up their data so that you can have new, fintech startup companies that can do personal finance managers, digital wallets, all these sort of things sitting on top of that bank infrastructure. The issue is if you open it up completely, as we've done, with no restriction on who can access that data, you have to have a suspicion that the people that will capitalise most on that are not little garage startups with their great new idea, but actually the incumbents. So you have people like Facebook, Amazon, Google, Apple, the people who already have these platforms in place. They have access to customer data, which means they can, and by the way, there's also transactional services available through those APIs as well. So that means they can now essentially provide banking services without actually being a bank.
Sure.
So, I go into Facebook and I want to do something financial, whatever, I don't know, borrow some money or something. Why would I come out of Facebook? I can do it all in Facebook. And the fact that Facebook underneath is plugging into one of the existing banks, I might not even know which bank it is.
Okay, so that is sort of scary because Facebook has so much other information about us. So it might, it has a whole lot of information about what you might do in your spare time, the sorts of products you might Google, the events that you go to. And when you tie financial services into that, does that get a little bit scary?
You're right. You're ending up in this highly asymmetrical situation where you have people who have access to vast amounts of data and the financial services data competing with people who only have access to the financial services data. And, you don't have to be a genius to see this is why some of the European banks are starting to get very upset about the current situation. There's no reciprocal right on those platforms to provide data to the banks. Or, to put it absolutely crudely, Amazon can have access to your bank account, but the bank can't have access to your Amazon account. That's not really a level competitive playing field, is it?
Right, so we're sort of trying to trying to take some of the power away from the big banks and spread it across other firms, but we're actually just moving it from the banks to the big four like Google, Amazon, Facebook, those guys.
I think that's a reasonable summary, and hence the point. If you go back to sort of the regulator's actual goal, which is to have more competition, there are different ways of doing that. You don't have to go straight for this sort of technical API-based open banking. There are other, so for example, other things that could be considered.
Yeah. Actually, before we get into that, because that's probably a slightly different tangent. Okay. But with that competition space, from what you're seeing in the UK, are those other smaller tech companies, those firms, is the environment in the UK actually boosting them up? Because that is kind of the intended goal of open banking. Is that happening as well?
In the UK, the APIs have been open since the beginning of the year. It's really too soon, to see who's going to take advantage of that. So it's a fair point to say, perhaps some of these fintech challengers might yet come out of their garages. But on the other hand, if you look at the resources that those incumbents can put into it, plus the other people who would like access to that data, the big retailers and other service providers, it is hard to see how little fintechs really can compete against that. There's other factors to take into account. It isn't just the access to the data. It's dealing with things like GDPR, PSD2, all the other regulation. I mean, banks and other people, they complain about regulation. But to be honest, it's a little moat around their castles, isn't it? And in some ways, the more absurd and restrictive that regulation is, the more expensive it is to comply with KYC, AML, CTF, PEP. That actually defends the incumbents against those startups. So, yeah, okay, it's early days. But I'd have to say you can't point to the UK and say there's evidence that you've got this flourishing competitive space yet.
Sure.
You haven't.
Okay, in New Zealand currently we have Payments New Zealand, which is sort of leading the charge on open banking, and it's developing a framework as well as the technology, so these APIs that other fintechs can use to sort of plug into the banks. And the framework that it's developing is really important. It's sort of looking to develop some standards, or I guess some rules. It's all self-regulated because Payments New Zealand is owned by the banks, but they want to get the framework right, so they say. In the UK, what are the restrictions around fintechs or Facebook or whatever plugging into the bank's data? What thresholds do they need to meet to get that plug-in?
What do you mean thresholds?
Or what are the standards? Because no doubt you can't just have any old garage startup or mega giant plugging into the bank systems. What do they need to do to qualify to be able to do that?
In Europe, you have categories of regulated financial institution, not just banks and credit institutions, but also payment institutions. And so essentially the route for most people, like if you're a Coles or a Woolworths or something like that, what you're actually going to do is create a payment institution and plug into the banks through that payment institution. You're not going to create a bank. But you're right, you can't, not anybody can plug into it. You have to go and apply for a license and meet some certain basic standards, of course. Okay, so is that providing enough kind of protection so it's not, that data's not going to be misused by whoever, plugs in and uses it? Well, it's not going to stop data from being misused, but if somebody does misuse it, at least you'll know who they are. And in theory, you'll be able to take action against them. I mean, these are regulated institutions. Sure, okay. Look, I mean, other ways of creating this competition and perhaps not using APIs, as you sort of alluded to before, what would some of those be? Well, I mean, people are exploring other alternatives. One line of thinking which I think is quite interesting is to opt for what people talk about as graduated regulation. In other words, if you're a little fintech, can you get some sort of license, not a banking license, but some sort of fintech license, which allows you access to certain basic banking functions and underlying banking infrastructure? So one of the interesting things that's not talked about as much in the UK is that the Bank of England has decided to allow non-banks to have settlement accounts at the Bank of England, special kinds of settlement accounts. So you have fintech players, TransferWise is the first. So you have fintech players who now have direct settlement accounts at the Bank of England. And that kind of thing is a different way of getting the competition that you need. Okay, so if they can have direct access to that infrastructure without having to go through banks, that obviously reduces their cost base and gives them more flexibility. So I think in the case of New Zealand, there are other possibilities that can be considered, as well as mandating API access, which has the potential to backfire in some ways. Okay. If, given we are going down this open banking route currently, do you think it shouldn't be open banking, but it should be like open company or something whereby if the banks are going to share their data, then whoever they're sharing it with, then it needs to be a reciprocal type of arrangement? I mean, the issue of open data as opposed to just open banking, I think is quite interesting. So, we're going through, as people often observe, another kind of industrial revolution where data, and in particular personal data, is kind of central to the economic model. So you could argue that in an analogous way, in the 19th century, you had to break up Standard Oil in order to essentially protect capitalism from itself, and then in the 20th century, you had to break up AT&T in order to. You could argue that perhaps the way forward is to look at a open solution for everybody. So if you hold people's data, I mean, once you're above a certain size, then maybe everybody should have the right to plug in and use that data. I mean, with the customer's consent, of course. Yes. And that might be a way of creating this more open and competitive landscape where it's easy for new people to come in. Because right now, the truth is, if you want to compete with Amazon or Facebook or Google, I mean, you haven't got a prayer, have you?
All right, Dave. Well, thank you so much for coming in. This is scary stuff, I think. Just the prospect of what these big corporations can do with the amount of information they might have, whether it's a bank or whether it's Google or Amazon, we're looking at quite a different future, aren't we?
I think, you're right, it is a different kind of future, and therefore it requires a different regulatory mindset as well. Taking what you might label industrial age solutions, monopolies and mergers commissions and competition authorities and this kind of thing, and trying to apply them to this new data economy doesn't seem to work. And I'm not smart enough to know what the answer is, but I can see that it needs a different kind of regulation. And I think for the regulators here to look in some detail at what's been going on in Europe, not because Europe is a template, but in order to learn from it, right now, I think it's actually quite valuable.
Yes, that's a really good point. I mean, we are at a good place, really, where we can look at what's happening overseas and hopefully make some of the right decisions. Thank you for your time, and I'm Janae Tibshirani from interest.co.nz.